Okay. So he's actually not wrong, but if he follows the what, is it the lecturer or the tutor?
It is the tutor, but he uses the same slides as you do.
Yes, so you need to take him back to the because I actually use full-time student slides. So I advise for you not to get confused, you should take him back to the slides that have where it says that you need to close off your assets accounts and your liabilities accounts. You need to close them off to your realization account. They are carrying amounts. You need to close them off to your realization account.
Okay.
Yeah. Then I'm sure he'll give you more explanation on that. However, what he did, he actually did the same at another method, however, we'll get to the same answer at the end.
Okay, so he just used another method.
Yeah.
Okay.
Okay.
Okay, so
Mm-hmm.
the realization account you're explaining now. On the debit side comes the assets, and
Mm-hmm.
on the credit side comes what the partnership received.
Mm-hmm.
Okay.
Okay. So with this realization account, first the assets. We said that the assets, you first need to close off your assets to your realization account by crediting your asset general ledger account. You need to credit your assets so it becomes zero. Are you together? So you credit your asset account and then you debit your realization account. So you have, in this case, with their carrying amount, vehicles 80,000. And then from there, you will have the liquidation amount. The amount that you received after selling off your vehicles will be recorded on the opposite side. Because your carrying amount is on the debit side of your realization account, the liquidation amount will therefore be on the credit side. That's why we have cash or bank of 51,000 on the credit side. The same applies to your liabilities. You close them off by crediting your realization account. For example, your creditors 35,000. And then the total payment that you make your creditors will be recorded on the opposite side, which is your debit side, cash or bank 35,000. So we ended at loan. We ended at now the loan. We said that loan was 62,000. It's a liability, so it's recorded on the credit side, and then on the debit side we'll have cash of 62,000. That was paid. Now from there, the next step, which is step 3. Step 3 states that you need, after drawing up your realization account, you need to close off your realization account to your capital account. You need to close off your realization account to your capital account. Now, how do we close off our realization account? It's by working out or balancing of our realization account. So let's balance of our realization account. If you add, first you add these two, this at the debit side, then you get your amount. So the debit side amounted to 497,200. If you can just do it, 80,000 plus 35,000 plus 265,000 plus 55,200 plus 62,000. Then it will give us 497,200. And then we go to the credit side. We have 51,000 plus 35,000 plus 240,000 plus 4,100. And then we plus 62,000 plus 7,000. Then we'll get 43,000, 435,100. So if we compare the debit and the credit side, obviously the debit side is the biggest. So you record the 497,200 on both sides. 497 on the debit, 497 on the credit side. The same way we balance off our ledger accounts. Okay, and then now 497,200 minus 435,100 will give us a total of 62,100. So just calculate that and make sure that you are getting 62,100. So 62,100, that is the total that we got. That is the total amount that we got in our realization account, or that is the total loss. It's actually a loss on a realization. That is the loss on the realization that we got, and therefore we'll need to record it, or we need to close it off to our capital accounts. So 62,100 will be divided among the two partners. So how will we divide it if we were not given any profit sharing ratio? Please take note of this. Usually when you are not given your profit sharing ratio, when you are not given a profit sharing ratio, you will have to use their capital accounts. You will have to share profits and losses based on their capital balances. Are we together? You will need to share profits and losses based on their capital balances. So in other words, you will need to calculate or to find their profit sharing ratios based on their capital balances. So let's calculate. So let's quickly find out their their profit sharing ratios. So firstly, you have Congo. Okay, maybe just do it here because I didn't show calculations. So you have Congo here. You are told that Congo has a capital balance of 130,400. So 130,400, and then you divide it by their total amount of their capital. You understand? The total amount of their capital is 152,400 plus 130,400. So how much will that give us? So 152,400 plus 130,400, it will give us 282,800 as their capital, their total capital. So Congo will have 130,000 over 282,800, and that will give us 0.46. You need to put it in percentages. So you need to, for easier use, it's better you put it into percentages. So you multiply by 100. So 130,400 divided by 282,800 multiplied by 100, it will give you 46%. And then we move on to Albert. Albert had a capital balance of 152,400. And then you divide by their total, which is 282,800. And then you multiply with 100, and then you give you 54,000. Sorry, 54%. So obviously, if you have 54% plus 46% will give you 100%. So they're equal. Do we understand how we got the ratios?
Yes.
Okay, so these are the ratios that you have to use, to share the 62,100. So 62,100 times 46% of Congo will give you Congo's amount of 28,566. And then 62,100 times 54% of Albert will give you 33,534,000 of Albert's share of the 62,100. Do we understand till there?
Yes.
Okay. So just take note that when you are not given any profit sharing ratio, you need to find your profit sharing ratio based on their capital amounts. Okay. And so we move on. So the next thing that we do is we move on to the final step, which is closing off your capital account, because right now we only have the capital account that is still in existence. We are done with all our assets account by closing current account by closing it off to our capital account. We are done with all our assets and liabilities account because we close them off to our realization account. Now we are done with our realization account because we close it off to our capital account. Currently, we only have our bank account and our capital account that are in existence. Currently, it's only the bank and the capital account. So let's go on to the capital account. Capital account, we have the balance as a 30 June, the balances of 152,400. So Albert had 152,400 and Congo has 130,400. And then we close off our current account. So we have current account balances of current account. We have Albert has 43,500 and Congo has 54,500. Are we together? And then we also said that we close off our realization account. So we close off if our realization account was credited, so we need to close it off to our capital account. So on the debit side of our capital account, we have 30 realization and then the amounts. Are we together? So you cannot record the realization on the credit side if already in the realization account, it's recorded on the credit side. So you need to record on the opposite side in the other account. So realization on the debit side plus their amounts, their share on realization loss. Do we understand till there?
Yes.
Okay. So let's close off our capital account. Now we need to close off our capital account. So you add the debit and the credit side. Ignore the cash. So let me quickly just erase this so you guys understand much clearly. Okay. So we need to close off our capital account. So looking at this out, the credit side is the biggest, obviously. So 130,400 plus 54,500 will give us 184,900. 152,400 plus 43,500 will give us 195,900. The same, so we record them on both sides. Are we together? Okay. So 184,900 minus 28. We need to find. Now we are balancing. So 184,900 minus 28,566 will give us 156. Okay, 156,334. Meaning that this 156,334 should be this is the total amount that we need to pay Congo. Congo needs to receive Congo's capital balance is 156,334, and this is the total amount that he needs to get paid. This is the total amount that he needs to receive. And then we move on to Albert, 195,900. So 195,900, you minus the realization, the total amounts on his debit side of 33,534. Ne? So he needs to receive 162,365. So he needs to receive 162,365. Now, where are we getting this money from? Remember, we have a bank account or a cash account that is still in existence. Ne? So the money that is available. Now we need to calculate the total cash or the total bank balance that we have. So you can draw up your cash account, or you can just calculate your cash amount like I did here. So in the statement of financial position, we had a cash balance of 84,600. That is the total that we have, 84,600. And then we add all the amounts that we received when we sold off our assets, and then we subtract all the payments that we made. So 84,600 plus 51,000 that we received, which is 39,000 plus 12,000. Eh? Or we can even do it this. 84,600 plus 39,000 . 39,000, and then we plus our 12,000, and then we are told that we also received again another 140,000 and received another 100,000. Ne? And then we also told that we received another 40,100 for our accounts receivables. And then we paid our accounts payables in full of 35,000. And then we also paid back the loan of 62,000. So what is the total cash that we have left? So if you add up all these amounts and subtract the liability, the amounts that we paid, it will amount to 318,700. That is the total amount that we have in our bank account. Are we together? And this amount that we have in our bank account of 318,700 should be the total amount that we need to record, that needs to be. This is the money that we will use to pay off the two partners. So if Congo is being paid, so we have cash, bank. So if Congo is being paid 156,334, Albert is being paid 366. Not 365, 366. Oh, what am I doing? So if Albert is being paid 162,366 and Congo is being paid 156,334. So if you add these two together, how much will they give you? Quickly add these two amounts that they were paid, 162,336 plus 156,334. How much will you get?
318,700.
You get
318,700.
You will get 318,700, which is the same as the total amount that you have left in your bank account. Then you know that your recordings are correct. Because now,
Sarah?
Because now if we are to draw up our bank account, let me say you are told to draw up your bank account or your cash account, then the 300, it will balance, it will close off because all the two sides will be the same. Let's try doing it. Because now our capital account is balanced, so let's try drawing up our bank account. So here, oh, sorry. Okay. So the first thing here, you have this whole so this is the bank account. So details, I omitted the date column, and then the amount, the details, and then the amount. So the first thing that we received, our opening balance of bank or cash, opening balance was 380,000. Sorry, was 84,000. What am I writing, Lord Jesus Christ? Balance of 84,600. And then we move on. So we received 39,000 realization. 39,000. And then the total realization on vehicle. The total was 51,000. And then the realization on PPE. We received an amount of 240,000. And then we received our payment from debtors or realization on debtors. Realization on debtors, we received 40,100. And then on the credit side, we paid off our creditors. So realization on creditors will be 35,000. And then realization on loan of 62,000. Okay. So if we balance off our cash account, we'll then have a balance of 380,700. And then we are told that we paid Capital Albert. Remember, we are paying, so our cash or bank is decreasing on the credit side. We paid Albert. So how much did we pay Albert? We paid Albert 162,366. 162,336, and then capital Congo, where we paid him 156,334. 156,334. Okay, so if we are to end up this side and this side, it will give us 0. All these two sides are equal. Then you know that your cash and bank, your cash or bank account was closed off. So currently we do not have any book left anymore. Our capital account is totally closed off, is 0. Our cash and bank account is 0. Then we know that our liquidation process has ended, or the business had come to its end. All accounts have zeros. Do we understand? Do we
Yes.
understand? Are there any questions before now we go back to the main question? Because all these were calculations, so we need to draw up our general journal. Before we go on to our general journal, okay, so there are no questions and we only have 8 minutes left. So because we only have 8 minutes left and we are going to do now the journal entries, I'll quickly just, they are actually not enough. And so I'll quickly just close off the session and then reopen it. So we quickly do the journal entries, which is now the most important part because that's what the question is asking and you need to know how to journalize the entries. So if there are no questions, we can actually use these 8 minutes to ask all questions relating to the calculations that we did. Any questions? Feel free to ask if there's somewhere where you still don't understand or you're a bit confused.
At the realization account,
Let me quickly just.
allowance for credit losses,
Mhm,
that 7,000.
mhm.
Why didn't we minus it from the cash amounts when we did the bank account?
Because allowance for credit losses, this is a provision. You do not pay for it. Allowance for credit
Okay.
losses, in other words, is provision for bad debts. It's just a provision that is made, thinking that, okay, our total debt is 100,000, but we think that we won't receive the whole amount. There are certain debtors that there's a high possibility that they won't pay us. So we are making a provision. We don't pay for that.
Okay, so you like write it off, you forget about it.
Yes, you just write it off to your realization account.
Okay.
Yeah. Any other questions? We still have 6 minutes, guys.
I just want to confirm the steps. So step 1, we close off the current accounts to the capital accounts by debiting the current and crediting the capital. And if we have drawings, we write it, the drawings, we write it off against the capital account. Where we use the amount of the drawings, where we credit the drawings and we debit the capital account with the drawings amount.
Yes.
Okay, that was step 1. And step 2, we close the assets to the realization account, where the assets are debited and the payments received are credited. And if there are liabilities, we recorded on the credit side of the realization, and the
Mhm.
payments done to them are debited on the realization account.
Mhm.
And to close off the realization account, we close off the realization account to the capital amounts which is owed to the partners.
Mhm.
And if they don't give us a ratio, we based it on the capital balances of
Mhm.
the partners.
Mhm.
And then step 3, we close off the capital account.
Mhm.
Yeah,
That's
that's
it.
it, right?
Yes.
Oh, goodness.
So if you know all those steps, then you won't have any problem with liquidation.
Okay.
Yeah. Any other questions, guys?
So whenever we ask to do a general journal of the entries on liquidation, we are advised to do realization account first and the capital bank before we do the.
I won't advise you to do that because you can only do this if you feel like you might you have you especially during the examination, eh? So if you feel like you have enough time, and you also feel like if you don't draw up your realization account and your capital account, you might get confused or you might miss out some journal entries. Then you can draw up your realization and your capital account. But if you're good with journal entries and you feel like you won't miss out any journal entry, then you just go straight forward to your journal, to your general journal. So in the next session, when we are going to draw up a general journal, we won't be looking at our realization account or our capital account. So we are going to do it assuming that we did not draw up any realization account and any capital account. So I just did this because sometimes the question can ask you, or sometimes you can be asked to draw up, to prepare your realization account and your capital account. So if I don't teach you this, then you might struggle in the examination. That's why I had to do the realization account and the capital account. But then in the examination, if you're only asked to journalize the entries, you can just journalize without drawing up any realization account or capital account.
All right.
Yeah. Unless you're asked to show your calculations. Unless you're asked to show your calculations. By showing your calculation, this simply means that you need to draw up other accounts relating to liquidation account. If you're asked to show your calculations, then you will need to draw up these accounts. Yeah.
Maybe we can move to the journals now. Okay, I have a meeting at 11.
Oh, okay. So let me quickly just end this session. Then I'll restart another session so we quickly do the journals.
Okay, thank you.
Yeah.